Gentlemen, welcome back to Help Coin. We're delving into something today that goes beyond payments and beyond Ripple. It serves as the cornerstone of the value-based internet. And you're missing the scope of what's going to happen if you believe that to be just another crypto jargon. Because what Ripple is currently creating is akin to the revolution in communication that email brought about. But it involves money. Here's the problem, though. We are not discussing a specialized market. We are discussing a system that transports trillions of dollars around the world every day. Cross-border flows, X settlements, remittances, and global liquidity is essential to the finance industry. The goal of Ripple is not to become just another payment app. The goal is to rewire the flow of value in the same way that the internet changed the flow of information. Because of this, it is accurate to say that Ripple is similar to Amazon in its early years, when it sold rare books before growing into a multinational conglomerate. Because a market for rare books that Ripple is aiming at is actually worth more than 10 trillion. The majority of people still don't understand, which is absurd. They think small when they see XRP trading below the dollar. Institutions observe that a once-in-a-generation liquidity rail is being constructed beneath the financial system as a whole. At this momentous juncture, money will soon be able to flow as freely as data, that line acting as email did for communication, but for financial gain. Let that sink in, though. That isn't conjecture. That is Ripple's own mission statement. It's already happening in real life. Time across major financial institutions, central banks, and cross-border routes connecting Asia and the Middle East. Now consider this. Around the world, trillions of funds are currently locked up in Nostra Vostra accounts. The system's inability to function quickly has resulted in dead capital being trapped. Ripple is releasing that capital that has been trapped by using XRP and on-demand liquidity. A real time bridge asset that clears value in seconds rather than days is being provided to banks. This is no longer theoretical. It's working. Additionally, each and every transaction that moves the clumsy Swiss system which has existed since the 1970s is getting closer to being replaced by XRP infrastructure. In response to the question, could Ripple ever replace SWIFT? It is no longer an issue of fantasy. It's a question about time. SWIFT lacks XRP's interoperability, scalability, and cost effectiveness. Hundreds of institutions are already connected using Ripplet. And those hallways are getting wider. It's not about going up against banks. The goal is to upgrade them, and everyone misses that bit. The financial system is not something that Ripple wants to ruin. It's becoming part of it. A disjointed, slow, paper-heavy infrastructure is giving way to an automated digital liquidity web where money moves transparently and instantly. The nicest aspect of that transition is that XRP is smack in the middle of it. The major participants such as payment providers, asset managers, and central banks are not examining charts or memes. They are examining efficiency, compliance, and throughput. For this reason, Ripple prioritizes enterprise-grade rails, compliance, and regulations. Because only networks that are prepared for regulation will have institutional liquidity when the floodgates open, as they will. You must comprehend this before we even discuss the ETF rumors, the institutional narratives, or the confusion around wallet security. There will not be an internet of worth. It is already being constructed in a deliberate, peaceful manner right in front of everyone. Additionally, when that switch is flipped and Ripple's network is chosen as the global liquidity layer system, XRP will be more than just a token displayed on a chart. It will be the fuel that powers the financial system of the future. Okay, let's get right in since this is the area where the majority of people are still unaware of how XRP works. XRP was never intended to be a speculative asset. Despite everyone's obsession with price charts and hype cycles, it was intended for use. That's what separates a utility that rewires finance for decades from a token that pumps for a month. Now, this is what you must encircle your head. The stability of XRP is not due to hype. Utility is the source of it. Over time, the price stabilizes more when the volume flowing through the network is higher. Trillions of dollars cannot pass through something that fluctuates by 30% every day. Therefore, rather than focusing on price fluctuation, XRP's architecture is designed to maximize liquidity. Behind the scenes, Ripple has been doing just that. For all onboarding organizations, creating hallways, clarifying regulations, and getting ready for the approaching scale. Because price discovery becomes genuine only if sustained high-value utility, not through retail trading, but through institutional payments. Let's face it, Bitcoin is incapable of doing this. Ethereum is also unable to. They were never intended for real-time liquidity between capital markets, remittance providers, and banks. In contrast, XRP aided specifically for such use case. It is economical, scalable, and quick. More significantly, though, it is dependable, and the institutional world compensates for dependability. Now consider it as this. The price of XRP today is a reflection of speculation. It will show the demand for liquidity tomorrow. The asset begins to behave differently as soon as real-world volume takes over. It begins monitoring its own utility metrics, volume, settlement throughput, and global transaction velocity instead than responding to the volatility of Bitcoin. The decoupling event is the moment that everyone has been anticipating because, let's face it, XRP will be in a class by itself when that occurs. It won't increase merely because an influencer posted a tweet. Because retail panic sells, it won't dump. It will follow the steady, reliable, and demand flow of institutional funds. You will then be able to observe what true price maturity looks like. And that's precisely the goal of Ripple's approach. They have little interest in short-term price movements. Adoption of infrastructure is important to them. The price of XRP will inevitably rise once central banks, asset managers, and international banks begin utilizing it as a liquidity bridge. balance gains value as it is utilized more, but without the confusion of speculation. Consider it a bridge asset that can move trillions of dollars every day without experiencing extreme volatility or slippage. It's not a cryptocurrency. Financial plumbing is what that is. Similar to how SWIFT signals are imperceptible but crucial, XRP will function covertly beneath the surface, enabling international liquidity transfers. And once that balance is achieved, XRP turns into a cryptocurrency that no other cryptocurrency can call neutral stratum of settlement for the world economy. Moonshots are no longer the focus. It's about updating inefficient infrastructure that costs trillions of dollars a year. Therefore, keep this in mind when you hear others complain that the price of XRP isn't interesting. It's intentional. XRP gets more potent the more uninteresting it appears, because scalability leads to DOS and stability leads to scalability. This is not an asset that suddenly becomes very popular. It's the one that subtly becomes interwoven everywhere, controlling the background as everyone else searches for the next meme. We'll talk about how institutions are getting ready for that change in a moment. Since the next stage of this market isn't about hype, EDFs, tokenized assets, and liquidity rails that link everything are essential. It has to do with ownership of infrastructure. The real tale of XRP starts there. This is the truth. The upcoming cryptocurrency market is very different from the one you are now familiar with. Retail conjecture was developed, the framework, but the structure will be owned by institutional liquidity. That is the stage we are entering, and XRP is positioned squarely in the middle of that shift. Consider it. Narratives are pursued by retail money. Money from institutions makes them. Retail seeks out buzz. Efficiency is what institutions seek. Additionally, if you look at Ripple's actions over the last few years, you'll see that they have been setting up XRP to be the liquidity engine that institutions rely on in the event of a systemic change. Tokenized assets and real-time settlement systems are being experimented with by BlackRock, Bankality, Franklin Templeton, DTCC, and even the BS. They're not having joy doing it. The current system is failing due to its inherent inefficiency, which is why they are doing this. You need a bridge asset that can manage immediate settlement without volatility risk when trillions of dollars are being tokenized, like as bonds, real estate, or commodities. Bitcoin isn't that. Ethereum isn't it. Here's what most people don't realize about XRP. If an asset is unpredictable or dangerous, institutions won't invest in it. They wait for it to be integrated, regulated, and liquid. And Ripple has already accomplished 2 of those 3 as of this writing control. The SEC action turned out to be a boon in corporation. Already it's taking place covertly through liquidity hubs, pilot projects, and corridors liquidity. Once the tokenization rails and